So hello, active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun coming at you live here on Saturday, August the 3rd, 2024. Broad markets had a big drop yesterday, Friday, and because of that, we went long in the inverse instruments that go up when the market goes down, such as SOXS. I was giving members live alerts all throughout the base, and we ran up nicely in that day. Also, UVIX had a big pop yesterday as well, as did SQs. So those are three instruments that you may want to keep on your watch list for the upcoming week ahead. All the things that are inverse ETFs, including SQQQ, SOXS, and volatility with UVIX or UVXY. And so this is the overall pattern. This is a daily chart. Now, if we look at the intraday, down here somewhere. If we look at the intraday, there's many charts to look at. One of the things I want to look at is developing a game plan for next week. And I always like to use what I call if-then trading. So if one thing happens, if we break a key support or resistance level, then I will be trading which instruments and how. And so one of the things I want to give you some clarity on is when the markets are dropping and chopping, that's usually a bad time to swing trade stocks, right? Because the selling pressure, and it's iffy to day trade momentum runners unless they're ETFs that are tied to the market during strong market up or down days. So what I mean by that, what that means to you as a trader is I would focus more on ETFs that match the market than that trade with the market that you can capitalize on based on what the market's doing compared to stocks. Now, there's some years in which I do maybe 70% of my trades are ETFs, whether it's the Qs or something else, or equities. And so the balance of the mix depends on the type of market environment we're in. So it makes a big difference. And one of the things we want to look at too is volatility. So as markets are getting more volatile, and you can see that as expressed by the height of the whole real candle bodies. The wider the range, the more volatile the market, and the more trading opportunities present themselves. It's really important to understand that. To become a good trader, you need to be a big fan of volatility, at least ranges, and understand how to capitalize on the moves as they occur. What's the current trend? What's going on? Well, we're going to pull back downtrend in the S&P, but the main thing in terms of height of candles is they're getting larger and larger. So volatility is going up, and that's expressed in our VIX. Right now I trade instruments like UVIX, or you might want to trade also UVXY. I used to trade VXX. There's different leverage with these. You want to take a look at the ranges on those to see what's appropriate for your trading style. This is what this guy did yesterday. Boom, that's the best chart in the whole stock market. And I traded, well, UVIX. I like that because it costs less and has bigger range. Anyway, 8 to 11, or UVXY 32 to 39. Now, call me silly, but I think there is some trading opportunity in these instruments, especially when you look at the longer term charts, and from where they came, it's lots of range to work with. Now, the challenge in trading this type of market is using trailing stops appropriately. And so what I like to do is kind of scale my trailing stop based on the price of the instrument. So if it's a $30 instrument for day trades, I use maybe 40 cents at most trailing stop. For swing trades, I may use $1 or $2. Okay, so depending on your trading style, your trailing stop value will vary. It will be different. Let's see. Oh yeah, hey John, how you doing? Hey, good morning. So by the way, if any of you have any tickers you'd like me to pull up and take a look at, charts of your choice, just throw them in the chat room and chat text, and I will pull those up for you at the in a few minutes. Anyway, so with this type of volatility, how do you take advantage of it? Well, there's the higher risk and lower risk ways. The lower risk would be starting off really small on a swing trade. I don't know, small might be, for you, might be 10, 50, 100 shares, whatever that is, a small position, and then scale in incrementally as it goes up, all with trailing stops. Or if you want to be more aggressive, like I like to do, if you're day trading, you may do 500,000 shares at a clip and scale in during a 8 or 10 or 15 minute run. So depending on your particular trading style, you have different price points and different lengths of time and number of shares that you trade. So to trade, let's see, to trade, I would say more conservatively. I won't say less risk, but more conservatively. For example, SOXS is the semiconductor inverse ETF. The semiconductor thing that goes up when chip makers go down, right? And so when you look at the weakness in chip makers lately, that's why this has been going up the last couple of weeks, right? Last week. A play on this would be a bullish cup breakout over 34. And to make it slow and steady, this would be a trade I'd recommend. Well, I can't recommend. This is a trade that one might want to think about learning from. It would be to start off small, maybe 100 shares. You buy it if it gets to 34.50. You buy another 100 shares if it gets to 35.50. You double down a martingale 200 shares up at say 36.50. Then don't get too excited. Just another 400 up at say 38.50, and just tighten the trailing stop as it runs. You can always scale in from there. So that way you kind of build a building block or a process step by step of your trades. So you're building positions over time. And so that's would probably be a very, very smart strategy, by the way, for everyone to think about, is how to swing trade, scaling into inverse ETFs if the market continues down, which I expect it will between now and November 4th. So depending on who gets elected, if one person gets elected, the market will probably rally because there'll be good economics and good trade tariffs and all that kind of stuff. And if someone else wins, then the market will go straight to hell. So if you've already built in your inverse ETF positions, boom, make even more. Thing is, what I'm saying is there'll probably be a different outcome. And if the elections go another way, these things will all go down because the market will skyrocket up. So if you do swing trade inverses, tighten up trailing stops, especially in late October, right before the election, okay? So that makes sense. Now let's take a look at what else is out there. Where is? Looking for my watch list here. Here we go. All right. So this was UVIX yesterday, right? Boom. I called along here and we sold into the 8.7, right? And then I said for experienced traders only, get back in over the 9.2, but we got in starting at 8.1, built entries and exits accordingly. And SOX is too, up on the uptick. Now, if you look at the SOX says, one thing you can do is what's called pair trading, and this is an advanced technique for intraday traders. I've done this for many years. Is you may trade one versus the other of things that are inversely correlated. So, for example, SOX L goes up when the chip makers go up, obviously, and SOX S, the short one goes down, goes up when the chip makers go down. So if you're intraday trading, let's say I'm in long SOXs and it runs up and I say roll over, I may sell it right there, take the money and run, boom, and then flip into a long in the opposite, in the SOXL, because that's going to be bouncing at that time. So that's kind of an advanced technique, but I do cover those in the live room for everybody. So that's something else to give some thought to as we move forward. Okay, let's hear some tickers. What do you guys want? Hey, next thing, what's the resistance to UVXY in the 1-year chart? Is it 42.04? I don't know up at the top of my head. I'd have to take a look. One-year chart, we're currently in early August, which is right here. UVXY would be just over 20. So back then, on this 1-year chart, yeah, I'd use 40. So we closed up at right under 40. So for that reason, I trade within whole numbers. So for example, 0.9, like 39.9 is a good place to sell. A good place to get in long again would be over the 40, say 40.2, 40.5, somewhere north of that whole number, and then tighten in a trailing stop as it moves up in your favor. Lots of volatility. Now, these things can wipe out your whole account and then some if you're not trading them carefully. So, it's like those advertisements saying, it says professional traders are professional drivers only. So trade small, trade carefully, and use tight trailing stops. Let's see what we have here. So what tickers do you guys have? Hey, NVIDIA, okay, let's see. How's all NVIDIA doing? I used to like Taiwan Semi is the best one, TS. Well, what does that tell you? What's the chart telling you? The charts speak, bum, 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 bum. The charts have a message. In this case, it's sell me. So I'd short this punk under 100, right? It's not a trade recommendation. Remember I said this, I would short at 99.4 to be exact, and a cover stop at 101. That would be the play in the video. Short 99, loss of the 100, 99.4, or anywhere under that, with a cover stop at 101, because it may bounce right over the 100 and then fade back down. So 101 would be a tight cover stop. So this one would be a short. Now, what about Tesla? It had a recent run up lately, back in early July, mid-July. It's been going down ever since. So remember, don't try and buy stocks on the cheap unless it's a significant saving or discount. We just want to be technical traders and buy the breakouts when they occur, right? What are the strongest charts possible? All right. I'm asking about Disney. Oh, thanks, Ted. Obviously, sellers in charge, right? This would be a short under, say, 86 or so. Right? If something's going down, it doesn't mean it's a good deal. Brings me up to a point that was really popular when I was doing live trading events in Las Vegas, which I will be doing again, probably this fall. So stay tuned for that. Live at the MGM with me and likely one or two of my colleagues. One of the things I want to pay attention to is the the range of the instrument and see whether or not it's worth trading based on the overall range. Now, another thing to look at is what the turnaround is going to be, what the breakouts are going to be in the individual charts as we're looking at them. So that wasn't very clear at that, what I'm trying to say. The point is, don't have what's called a department store mentality. That's what we call on the street. They'll say, hey, kids got a department store mentality. Just because it's on sale does not mean it's a good value. In fact, it means it's probably going to get even weaker. So just because it's gone up doesn't mean it's top and it's going to roll over. That's very difficult to get away from, right? Because as traders, it goes way down. It's a lot cheaper than it was, a day ago or 20 minutes ago. Let's buy it because it looks like it's cheap. Instead, what you need to do if you are going to bottom fish is use things like Steve Nissen's candlestick chart patterns, like hammers and other things that help give you a sense that there is, in fact, a bottom hammering out in addition to other technical indicators. Learn how to recognize reversal signals like hammers or a bullish engulfing that lead to an uptick. But don't just blindly buy into something because it's gone down and it looks cheap. That's a department store mentality. And that's something that took me many years to overcome. So just because it's cheap doesn't mean it's a good buy. Like, I bought Borders at $1.50. I thought it was a great deal. Well, no shareholder value. The dog pound is even worse. So one learns as one goes. All right. Oh, thanks. I appreciate it. I was asking about MARA. Bitcoin related stocks have had some pretty good volatility this year. Really big upticks earlier, right? But for the most part, they're too choppy to trade right now. So I'll leave these alone. This is a sell story, right? Let's see what else. So now's a good time for all of you to say, type in a ticker of a stock that you'd like me to take a look at. I've got a handful here so far, but so many of you here. Open the chat, click on the word chat, and then type in the ticker of or symbol of a stock that you'd like me to take a look at. Okay, let's see. Caterpillar. Thanks, Dave. anything, it's important to only trade the very best chart. So anything that's less than the best needs to be left alone. We take a look at some of these other ones. I'll go through some of these for you guys. One thing that it helps to do is to identify the types of patterns that are most likely to attract buyers. And it's none of these downtrending bottom fish bounce type charts. It's usually going to be a clean move, what I call an acceleration ramp. An acceleration ramp is where a stock has a steady uptick and then spikes up, right? So look at, for example, stocks has have a steady uptick and then a spike up, an angle like this and then that. All these downtrending charts are things to be sold. Another thing that I want to cover is that, and I know I was talking to a really smart executive at a lunch the other weekend. He was saying he was in, forgot, some retail stock and it had been going down forever. And he said he just held on to it all the way down and was losing a lot of money. I don't want you to do that. Take incremental stops on the way down. And if you think it's going to bounce, fine. Put a buy stop order above the nearest resistance area you think it's a good buy. But for the most part, holding on to declining instruments is just a painful experience that none of us want. So I learned quickly to dump it at the first sign of trouble. Like when you meet people, okay, now this is a good chart. I like this one, INVA. It was clicking to all the charts. This is a good example of a buyer's chart. I just randomly found this, right? That's what I do. I hunt and seek volatility. It's like being Indiana Jones. Dun, 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 dun. We're volatility hunters. Seeking treasure in the markets. So all the junk that's out there. Dun, 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 dun. Boom. Boom. Boom, boom, boom. So, good charts on the other end look like this. Got a 45-degree angle breakout and continuous run up. Well, thanks, Asa. Hey, thanks, Ronald. Thanks, John. I'll type those in. You want to look for charts that will continuously go up, right? That's what we want. Don't want a bottom fish. Be very selective. It took me like 25 years, just like when it comes to finding a person for a personal companion or whatnot. The older you get, the wiser you get, the more red flags you can see, and the more cautious you are, which is appropriately correct. And the older and bolder you get as a trader, the more you realize there's a similar detailed look at things that you would not have necessarily known to look for, 10 years ago when you first started or 20 years ago. So my point is be very selective and very specific. When in doubt, get out, cash is king, blah, blah, blah. XLU, more ETFs. That's a great chart, yeah, thanks. That's utilities. Okay, interesting. Utilities usually aren't that volatile. I used to trade oil and some other, anyway. Yeah, that's a great chart. That's the Rockstar chart. Looks good. I'd go, not a recommendation. I'd go along over, say, 76.5 or so. So I'd stop at 75. That's a good chart. Yeah, thanks. We'll keep that one. What's the other one? Hey, Kat's asking, do I ever utilize options on your plan? Whenever I look at options, my brain melts. I just, for the life of me, I know Larry McMillan is a brilliant guy, and I know options are popular with a lot of people, but I just personally have not been able to make options work for me. I tend to, the premium costs and trying to get time and price right is too much of a challenge. I think just getting price alone right is a big enough challenge, right? It's kind of like a rifle sight. You have to get both axes right per shot. I'd like to have to just get the one, so I'm not an options guy. But I'm not bad mouthing options. It's not something I personally have been able to make work. So if it doesn't work, I don't do it. Amazing. Caffeine. Okay, let's see. Thanks so much, you guys, for being here. Appreciate it. Bum, bum, bum. And see, I'm not doing any big sales pitches or that kind of crap. And for a limited time only. This is good. That's a great chart. Another winner. Now, tip, when you see something that's running up, you don't want to buy up here because, who knows where the high is before it rolls over. Instead, what I want you to do is run up, then a pullback, and then you buy the high above the previous pullback high. So in this one, it would be I'd use 44.20 and not a recommendation with a hard stop at 43. So that's first energy. So yeah, energy is a hot sector. Thanks. Hey, Lisa saying, hi Ken, hey, how you doing? I'm stuck in three stocks, GEN, BTSG, and ZM, trying to swing trade but caught up after earnings. Should I stay or exit? Well, it depends on your own personal risk tolerance. I'm a big fan of, what I've learned, I've traded millions and millions of dollars worth of stocks. You can see tax return proof on my website at Day Trading University. The live room page, I got screen caps of my Fidelity 1099. I traded 122 million worth of order flow year before last, so a lot of experience. What I found in all that is, unless it's producing money consistently, it's almost always a good idea to sell it, and then, but for the FOMO, which we all have, let's say you bought it at 15 and now it's at 7 or 8, and you hopefully you don't let it go that far. Say you bought at 15 and now it's at 10. Sell it all if you lose the 10, but rebuy if it gets back over the 15. So that way you can benefit from the uptrend you had initially anticipated. So that kind of gets rid of the fear of missing out of a big run. Like I'm going to sell, and then it's going to run up without me, right? How many of you have ever had that fear? I'm going to sell the stock, an ETF, and then it's going to run up right after I sell it, right? Because you've had that happen to you a few thousand times, and you realize that it can happen. The solution is just rebuy or scale in or get back in to the position with standing buy stop limit orders, right? So that way you've got a sequence of trades set up for you to help you benefit from the move if it does occur. But what I found is more often than not, I'm glad that I got it when I did, because I kept on going way down further than I thought before it bounces. So that's another lesson learned. So let's take a look at these charts. Traders stuck in longs. G10, BTSG. And ZM. Okay, let's take a look. BTSG. That's interesting, because that was a really good chart. It looked fine up until the bearish engulfing, right? Now, the initial stop out should have been on this day, or the initial day here. Now that's down here. Personally, if I ran it long, I would make it get under the 10 before taking a stop. Because they may find support down here at a previous low. And often they do find support at psychological areas like multiples of 10, so forth. So I would use like 9.7 as a hard stop, and I'd scale back in if it broke over the 12 and the 13. And not a trade recommendation, but that's what I would do. I would not take a hit right now because it's in an uncertainty zone. It's in the middle of a range. So that's a great chart, FE. But that's not the one to the other one is GEN. Okay, I can see that was a good setup. Again, the stop loss on this you'd have to use is right under, say, 23, like 22.8, because it may chop around here and come back to life. So you don't want to capitulate too soon. Now, if you're in very large size, and to me, large size is over 500 shares or so, I would scale out incrementally, say 24.5, 24, and so forth. By the way, your exit strategy should be a function of the share size, the aggregate capital that you've got tied up in that position. If you're in a large position, do a lot of incremental scales. If you're in a relatively small position, cool your jets, take a chill pill, relax, and use a wider stop that is designed to protect you. Okay, let's see. And the last one is ZM Zoom. That's an awful chart. I'd stick a fork in it. Technically you have to use a loss of 56. I use 55.7 as a stop area. But I would not be in this chart. This is a downtrending chart, so I would not be in this one in the first place. Yeah, trader's saying ALKS looks good. Well, thanks. Let's take a look. Alpha Lima, Kilo, Sierra. Yeah, that's good. Yeah, I agree. That's a good one. It's alive, right? I always think of a gap up as a gift from the trading gods, right? It's a gap from on high. Well, it's a light. It's like flipping on a light switch. It's alive. It's moved up. Maybe we can make some money with it. Yeah, it's a really good chart because the bullish engulfing and wide range up. So yeah, good spot on that. That'd be good. Even I'd hit it even over 28. I'd hit over every whole number. I go long over 28, 29, and 30. Say at 28, 20, 29, 20, 30, 20 to build a position. Yeah, that's a good really good pattern because it beat the cup. It's a cup pattern. It beat the cup on the gap, and so it'll move higher and likely to run. So yeah, good chart. Hey, Al, how you doing? Well, good to be back. Thanks, man. You're saying with the VIX over 20, should we expect the market to bounce on Monday? Well, anything's possible. I expect the market to sell off heavily next week, but I could be wrong. I mean, I've been wrong before. I've overtraded UVIX in the past, and it's bit me. But it's doing great now. So I was trading it lately. And I went cash out on the UVIX yesterday. Cash it all out, but I will rebuy if it does break the 12. So one thing I learned about trading these instruments for years and years and years is selling the strength, because often it'll head right back down again, and that's no good, right? That's no bueno. To make money in these instruments, you sell them on the way up. Just take the money and run. That took me many years to learn. Just like it took me many years to learn that just because, I said a prayer, no. Just because something, don't judge a book by its cover. Just because something looks great on the outside doesn't mean it's great on the inside. I'll just say that. When it comes to equity trading and ETF trading, when in doubt, get out. And when you're in the money, it's a good time to lock in a profit, because frequently, I will tell you this is very true over hundreds of thousands of trades. Usually an exit is, when you have a question about should I exit, it's almost always a good time to pull the hammer on that and go to cash, because maybe it opens up down here and then you rebuy on the way up. So on the VIX instruments especially, they always spike up and spike down. So if you're in it and you're fortunate enough, as I was, to be in as it spikes up, you sell, sell into the close, sell into the top, trail a stop and get out, and you can always rebuy at new highs. Nobody said you can't. There's not like a limit on how many trades you can do. So you can always sell into strength, sit out the pullback and consolidation, and then rebuy on a breakout, right? Hey, he's saying, oh, thanks. And he says, HRL is good too. I ate Hormel chili last night. I agree. How many of you like Hormel chili? I've not met a single woman who likes it, but almost all guys do. I don't know why it's such a gender split, but I even called her an ass, and the woman laughed and said, well, I like it. And, well, you work it, you gotta say that. Anyway, I think that's Hormel, right? Anyway, HRL, yeah, it's okay for a bounce, but in this market, I wouldn't take it because we're in a weak market. So if we're in a strong market, this would be a play. We don't play bounces or other speculative plays in a downtrending, choppy, broken market, because it's more likely to exert weight on the price action. This is more likely to flip back down here and run up here. So if it was an up market, it's a really good recovery pattern. 33.30, 33.40 would be the long, but I wouldn't take it because the market itself is broken, right? Market itself looks like it's about to fall off a cliff. Now, speaking, let's see, AN is asking, hey, thanks. Do you think Monday is Black Monday because the margin calls will kick in? Yeah, that very well may exert pressure on the market. So I do expect selling pressure. I expect, in fact, a dead cat bounce on Monday. Whenever you have extremes, you almost always get a little test of the opposite before the trend continues. So I would expect, regardless of the gap, we may well get some recovery buying by lunchtime. Don't be faked out by that, right? I told my live room traders this on Friday, and the call was exactly correct. The market was, S&P was going up right early, like right before 10 o'clock. And I told everyone it's a false bounce. It's BS. I call BS on the bounce. It's going to drop, and sure enough, it did, right? If I had a brick and mortar trading university, what I would spend a lot of time on initially is teaching you guys how to trade markets and timing before we look at individual equity charts. And traders get in trouble, and I've worked with thousands of traders, tens of thousands of traders at this point. Traders get into trouble because they trade off of technical chart patterns in isolation of what the broad market's saying. The market's selling off. I don't care if you have a bullish ascending triangle, you're going to end up in trouble, right? So you want to use common sense and make sure that you're trade the market first and the individual instrument second, in terms of prioritizing the approach. See, the market was doing this. I was doing this right earlier. It did a bounce here right near 10 o'clock. It sold off, did a bounce. I told my traders, no, it's going to probably sell back down. It sure did. It went down, chopped up and down for the next hour or so, right? And it stayed down most of the session. So market is relatively weak and it's a good time to get out of there. All right, well, our time is about up, folks. Thanks for being here. If you take a look at yesterday's video recording of the live event, or at least the first 40 minutes, and it's at my Day Trading University YouTube. You can also see me play sax on my YouTube channel. And if you'd like to join me, I'd love to have you. We're moving forward with all the things in the live room. So you guys have been great. Thank you so much for being here. I appreciate it. Let's make next week a good one. Trade small, like Sazon says, trade small, trade often. I agree with him. Make frequent scale in and scale outs. Make it simple. Only trade the best and strongest breakouts, not the extreme ones. And stay safe out there. So trade smart. See you guys next time. Thanks, everyone. Appreciate it. Trade well. Goodbye.